Hi, good evening. Welcome, Vishal, to our channel. It's always great to have you. First of all, congratulations for launching the new funds. Best wishes to kind of start.
Thanks a lot, Ganesh. We're really excited about this, and really thank you for calling me on this channel and helping me explain to investors about what Zerodha is all about and the new products that we're launching.
Yeah. Just for information, I'm also one of the investor, so I'll be very keen to kind of know.
Very
So
good to hear that.
sure. So let's start. First of all, again, congratulations for offering first funds launch. It's a great start and huge milestone. So how's the feel on the ground or at office? Feel how is your team is feeling?
Oh, very excited. I mean, it's been a long wait, but finally there was light at the end of the tunnel. We're very excited to be able to launch and come up with these new offerings, and looking forward to the investor response.
Yeah, I'm sure. I think it will be much more because I've been following Zerodha and your fund house. I think there is already a lot of aura which you guys have created. So a lot of fun following is there. So that should anyway get into the
Thanks.
numbers.
Keeping our fingers crossed.
Yeah, no, definitely it will be right. So few things which I also, as an investor or being in the industry, always wonder. Okay, so any new AMC comes, obviously, they have their own philosophy, values, and whatever. Can you kind of take some minutes to explain to us what is Zerodha's philosophy, particularly the investment philosophy? And now you guys are launched index funds, and one of those is the large cap, mid cap. Okay, it's quite interesting. So just want to know what is the thought process in fund house, what is your investing philosophy, and how you are looking at the market, and how you can kind of value add to the investors.
So, good question, Ganesh. I mean, I think when you look at, when I see the industry, I would like to split it in somehow, in like two phases. I think the last 30 years, I would call it MF 1.0, where, the entire industry was, focused towards garnering AUM, whether it was focusing on institutions or HNIs, and therefore the entire focus, I think, in the initial bit was towards the evolved and the educated investor. I think the next 15 years, I would tend to call it MF 2.0. I think the focus has to be on retail. When you look at numbers, even today, I mean, we've done quite well as an industry, but we have 4 crore unique pans as of now in a population of 140 crores. So I think the market out there is huge. A lot needs to be done. I think that today it's never been harder to be an investor. I mean, there are so many products, there are so much of jargon, and I think the importance is that simplicity is the key. If you want to increase penetration, therefore we need to keep in mind who's going to be the investor over the next decade and a half, and build a journey for that investor. And therefore you need to rethink, reimagine the entire investor journey for a new India, a new generation that is going to use these products. And I think that's very important. And I think to get more and more people to start using mutual fund products, simplicity is the key according to me. And therefore having a simple product suite, simple ways of communication, building a simple investor journey, and a quicker and more consistent kind of a customer service, I think, is what is required. And I think keeping that in mind, I think our objective is to ensure that whatever we do, we're able to kind of build that simplicity in whatever we're doing. So whether it is our product suite, the way we are communicating to people, I think we always have that in our mind that a lay investor should be able to understand what we're saying. And therefore simple products that can be the core of an investor's portfolio is what we're focusing on. And if you look at our two NFOs at this point of time, they kind of fit all those bells and whistles because they're passive products. Passive simply because of the fact that passive products are easy to understand, they're transparent, they're cost effective, and they're extremely versatile for any investor to use. When you look at these two schemes, they're based on the Nifty large mid cap 250 index. And if I tell you a little bit about the index, it's a combination of 100 large cap companies that are part of the Nifty 100 index, and the 150 mid cap companies which are part of the Nifty mid cap 150 index. But when you look at the ratio, it's a very interesting ratio in the sense that if you have an index which is based on pure market cap, Then 85% would be in large cap and 15% in mid cap. But if you look at this particular index that we've launched, it's a 50-50 split between large cap and mid cap. Therefore, it has a good bunch of established, evolved companies, who've been around for a while. These are companies which have established business models. When you look at these 250 companies, they represent approximately 85% of the market cap, of the stock exchange, and approximately about 70% of the volumes, and cover approximately about 20 sectors. So it's a very simple product for someone to use. Can be used as a core for any investor's portfolio. Who's looking at sitting on the India growth story in that sense.
No, very good. Well said. I think when we told who are going to be the new investors, these are all different thoughts. Okay, so I agree because unfortunately, we did well as an industry, but we have just crossed 4 crores, and somewhere in the insurance has crossed 40 crores. So there is no just not comparing both the product, which are really not a apple to apple. But yeah, but I think the stripe should be taking up to the much level of. Interestingly, recently I did one. I was part of one of the investor awareness campaign, investor education initiative, or IAPs, what do you call. There were a lot of people who has probably invested in crypto, okay, more than mutual fund, and this happened in one of the major city. And all those guys who came were not mutual fund investors, but they were crypto investors. So it's quite interesting to see people invest in crypto, and that's where I believe, I think whatever you are telling is kind of fitting it well. Make it simple. Investing is not simple, but at least make those reachability simple so people can understand and can be part of the portfolio. Okay. So if you are going to be a layman investor, okay, or a investor who is already seasoned, who is having a portfolio, what do you think? Your both the funds will fit in and make the portfolio better for a investor who is just coming in, and for the investor who already has a portfolio. So how do you see both? So if you want to kind of explain to them in simple terms, or what do you think? What could be the value?
When I look at India as a country, India is very well placed globally. I think it's the next decade is going to be India's decade. Again, as I mentioned to you, I think simple products just to invest in the India growth story, to me, make a lot of sense. I think investors can use this product to take simple exposure to the Indian market. So if you're a new investor, you should slowly start investing in a product like this through an SIP. Keeping in mind that when you look at even data that NAC brings out on the NSEs, on the NAC indices, it shows that over a 5-year horizon or so, the chances of making negative returns is very low. I mean, keeping in mind the fact that, look, these products are equity linked, and the only certainty in the markets is uncertainty. So markets will keep going up, markets will keep going down. I think, but the important thing is that if you have a horizon in mind, and if you keep at least a 5 to 7 year horizon, I think for most investors, it'll make sense whether you are already an evolved investor who's been investing in the markets, or you're a new investor who's just starting off your journey and looking at investing in the Indian markets, and benefiting from the India growth story.
Correct. Yeah. So you see, index versus active funds. There's always a debate. Okay, which keep on happening. So why you think the index funds, the two one which has been launched by Zerodha, is there any great value addition these funds bring in competition to other index funds which are available?
Look, I think whether it's active funds or passive funds, I think, look, both can be in your portfolio. But when you look at it from the perspective, I want to invest in the market, right? When I say what is the market for me, when I look at the market on a day-to-day basis, I say that the Sensex has gone up, or the Nifty has gone up, or has gone down. I'm basically talking about the index, and that is the market for me. And the simplest thing, therefore, for an investor to do is invest in the market, which is the index. And I think that should be the core of an investor's portfolio, right? Because that is what you're looking at taking exposure to, which is the equity market. And therefore, an investor can invest in both types of schemes, whether it's active or passive. I think the way to split it is look at a core and satellite kind of an approach, where the core of your portfolio becomes a simple diversified passive equity fund, where it can be an index fund or it can be an ETF, and the satellite portion of your portfolio can be an active fund or an alternative fund, or something that you believe that you can
Correct.
outperform, or there is some thing which you believe will enhance the return of that core portfolio. right? That split of a core and satellite, I think that depends on each and every investor's risk profile, financial needs, time horizon, and investors can decide that accordingly. I mean, so it can be a 60/40, that means 60 core, 40 satellite, or it can be a 70 core or 30 satellite, or it can be an 80 core or a 20 satellite. I mean, investors can decide how they want to split it, but I think it's a very disciplined way to have different kind of thematics or portfolios or schemes in a portfolio and take advantage of all of them in that sense.
Very good. In fact, I was just reading some. I think the Prime Minister has told in the Global Congress meeting that India will lead in 6G. Okay, we are now talking about even 5G. I think now the government is focusing on 6G, which is good. Okay, so which means there is a roadmap which is very clear, and India is going to be on the top of this. Okay, as you told, I think this is all coming very clear out of this. I think now
Yeah.
it's investors who need to get benefited, else they are going to lose the race. Okay, it's as simple as that.
No, I think Ganesh, I think you're very right. I think I think there is a huge market out there. Even when you look at simple statistics, simple data today, there are 50 crore in people who've linked their Aadhaar cards with PAN, which means for us as an industry, there's another 45 crore people that are there to be
Exactly.
tapped in some way or another. Long way to go. I think this is just the beginning.
Correct, correct. No, excellent, excellent. So, what is the roadmap of Zerodha? What you can tell our investors. As I told you, I am also investor, so kind of quite interesting to see what kind of funds we can expect from Zerodha. And you also touched on to have a great service. Okay, so I just want to, because one area which as in the industry I can feel is one area as industry we can improve is on the service side. What is the roadmap for Zerodha AMC for what we can expect going forward?
So again, our objective is, to build an investor journey which is simple. I mean, today when you look at, what all of us are used to today, we're used to smartphones. Most of us are, whether it's shopping or it's investing that we're doing it on apps. And I think that's the objective. I mean, we want to build an investor journey which is attuned to the generation and to what we are used to in today's day and age. And therefore, as I said, simplicity for us is something that we'll keep hitting as we move ahead. When you keep the aspect of simplicity in your mind, the easiest product to launch are passive products. So we'll be having products, in the form of index funds, in the form of ETFs, basically giving core building blocks for investors to use in their portfolio. And at some point of time, we'll extend those even to certain solutions. So we will have basically core building blocks that investors can build their portfolios with. And at some point of time, as we go ahead, we'll also have solutions for investors, to make investments through. So the way I look at it, in a very laymannish term, when you walk into a restaurant, I mean, you have a la carte menu and you have a thali as well, which is ready made. So we plan to provide both to investors. So we'll give you an a la carte menu through which you can kind of create your own portfolio. And those products will be across equity, across commodity, across debt. So again, simple products, a simple product suite through which you can build, a simple portfolio, which makes sense. And also, certain solutions through which you can just make a single investment and, it takes care of all your needs in that sense.
Very good. Very. I think you are just making it simple for investors to understand. Okay. So this is
That's the
great.
objective.
Yeah, yeah. So the last question from my end is, as a investor, okay, you as an investor, what is your learning from equity markets, and what is you want to tell to any new investor who is entering into equity markets?
So I would say that, look, again, India is, again, my belief is, I have a very strong belief in India. I think India is very well placed, and I think people should stay invested, in the markets. Look at a horizon of at least 5 to 7 years when you're making your investments. One of the things that I've learned over a period of time is keep your portfolio simple. Personally, I don't like to have more than 4 or 5 entries in my demat account. I start getting uncomfortable because, as a person, I feel that when times are bad, it becomes difficult to manage and control your portfolio. It all looks good when the markets are going up, but when the markets are going down, it's very difficult to understand and then maneuver your portfolio if you have, too many, entries in your demat account. So I think keep your investments simple. Have a few entries in your account. You don't need more than 5, 7 products to build a decent portfolio. Stay invested in the Indian markets. SIPs are a very good way to invest. I get a lot of questions, from people saying that, markets are very high, markets are very low. What do we do? Markets have corrected. I would tend to think, keep investing small amounts every month. If the markets go down, increase the intensity of that SIP, but stay invested.
Excellent, excellent. Thanks, Vishal. I think it's been a great. Best wishes to you and your AMC. I think you are here to create wealth and also going to create simple products to make wealth more attractive. So, as I told you, I'm also your investor, so I'm very keen. And best wishes to you and Zerodha Fundos.
Thanks a lot, and we're very happy to have partners like you on this journey, Ganesh. Thank you so
Right.
much.
Thank you so much, Vishal. Take care. Thanks. Bye.